Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company this Friday afternoon. Let's get right into it and see where the local market is tracking as we round out the day's trade. Up 0.4% there on the CBO 200. Miners and financials offsetting broad losses elsewhere. We've of course been watching all week the fallout from renewed fighting in the Middle East, also the prospect of rate increases globally. I will point out, though, that Westpac has just come through tipping that the RBA will start to cut rates from 2027. So, of course, a little bit of upside coming through in some of the momentum there. I will just get you a quick look on where the S&P ASX 200 is as it heads into the match-off. It's up 0.4%, 8,792. So pushing back towards that 8,000 point level. It's down by 0.6% of 1% over the last 5 sessions. So certainly narrowing its earlier loss. I think this morning it was down something like 1% over the week. Oh, Nadine, who's left-handed, has put this there. I'm going to have to move it across. Bear with me, live TV. Let's have a quick look at some of the 3 themes, though. It was a weak week there, and we mentioned down by about 0.6% over the week. This radioactive rise, we've been tracking the movement here in a lot of these uranium players on this agreement between India and Australia. So some very solid moves coming through from some of those uranium players. I think Deep Yellow is one of the top performers on the S&P ASX 200. In fact, when we look at the top 5, Deep Yellow is up 8.5%. So some very solid moves coming through there. And then SK in the USA, this is really interesting. SK Hynix, one of the world's biggest memory chip producers. So, of course, it's a South Korean company. It's heading to the NASDAQ tonight, giving US investors direct access to a company at the center of the AI boom. Now, I just want to put this into context because demand for this listing of the ADRs on the NASDAQ has been 7 times oversubscribed. That is giving SK Hynix a market cap of around 28 to 29 billion US dollars. Yesterday, we had the biggest listing so far of the ASX in 2026, which was FDC Construction, a family-run business that's finally going public. It, as the biggest listing of the ASX this year, has a market cap of just under 1 billion Aussie dollars. So this is extraordinary what we're seeing with SK Hynix, shares in the South Korean market, in the COB, have surged ahead of the listing, and really just strengthening America's role too as a key market for global semiconductor companies and putting SK Hynix among other chip players. So if you hadn't heard of it before or before the last couple of weeks when it's been making news, it's going to be one of those stocks that we talk about as much as we talk about the likes of Nvidia and some of these other big companies. Let's get into the sectoral moves today, kicking it off with energy, a little bit mixed there. Of course, I mentioned the uranium stocks doing very well, Deep Yellow up by 7.8%, but the energy stocks that are the oil producing ones are coming under pressure. Moving on to the miners, all looking pretty solid today. BHP trying to get back towards that $60 a level. And a quick look as well at what else have we got out there? Maybe healthcare stocks. No, we don't. All right. It's Friday. We're just going to roll with whatever happens. Let's have a look at the corporate stories. Bravura Solutions. It had a very solid session, up more than 13%, upgrading its full year 26 cash earnings guidance to around $77 million. WiseTech, of course, was in the news earlier in the week with the changing role for Richard White, the co-founder. But today it moved to reassure investors about its relationship with the global logistics giant DSV. Shares down about 2%. Next, DC just slightly lower. It upsized its senior debt facilities to $2.3 billion. Vault Minerals eyeing its best week in 3 on that bid from Genesis. And Jumbo Interactive set for its best week since mid-October 2025. Morningstar saying the stock is undervalued. It is Friday. Let's welcome to the COB Shane Oliver from AMP, who joins me. Shane, always good to see you. Finally, a bit of positive upside for the local market. But again, these geopolitical concerns have really weighed on sentiment this week.
They certainly have done, and it always seems to weigh on us more than it does the US for some perverse reason. And of course, we've underperformed so far this year. When I last looked, our market's up only 0.5% or so for the year to date, whereas other markets are up far more substantially than that. And you can see it on that chart there, how to what degree we've lagged over the last financial year, but it's also been a story so far this year. Of course, Japan, not on the chart there, is Korea. They've dramatically outperformed because of their exposure to the tech story and the AI story, and unfortunately we don't have that. So that's providing a sort of protection to some degree to the US share market. But yeah, we did end up on a little bit stronger today. Looks like the market is sort of saying, in the words of my colleague, me boo. I'm sure she's borrowed it from us Australians. She'll be right. And that's the way markets are interpreting what's going on in the Middle East at present. I think there's been so many of these occasions where it flares up and then dies down again, then flares up, dies down again. Donald Trump always seems to say they want to make a deal. They've called us and want to make a deal. That seems to be his favourite line, even when no one's called them and no one wants to make a deal. But regardless, markets seem to still have faith in that. So that's why the markets aren't falling out of bed in response to the latest flare-up through the Strait of Hormuz.
Yeah, it was interesting. I read a note from Russell yesterday saying, forget the taco trade, Trump always chickens out. You need the tamales trade, which is Trump, makes something up and then backtracks. I'd have to look it up. I'll look it up when I ask you this next question to get it correct. But you touched there on your colleague, Mibui, and I had a conversation with her earlier in the week, and this is fascinating. So let's hear it from you too about, always talking about the good old days and whether or not we're actually better off. We were better off then than we are now. And you've got an interesting stat here on living standards and what we're actually seeing now.
Well, the reality is, if you look at things from a material point of view, things like GDP, per capita GDP, that one there, real household disposable income, it's way, way higher than it was in 1980, way, way higher than it was 20 years ago. There are concerns that it has slowed down recently. The productivity growth has slowed down, and so that's why people are feeling this degree of angst. And I think what happens is that as you go through life, you get used to something, you get used to the new high. It's a bit like your superannuation or your share market investments. Once the market goes up, that sets the new high watermark. Even though you may have risen quite rapidly, if it comes down from that, you feel kind of ripped off because your expectations have risen to that new higher level. So the reality is that from a material point of view, we are far better off than we were 20, 30, 40 years ago. But of course, people are comparing things to, say, 5 years ago, and compared to 5 years ago, we're not so well off. And that was highlighted by the OECD reports in the last week, showing the gap in real wages. Real wages are down about 6% from where they were, I think, in 2021. And that's because inflation's increased something like 24%. Prices have gone up 24%, whereas wages have only gone up something like 18%.
I was just saying that I found out what tamales means. So it stands for Trump always messes around, leaves everybody shafted. This is Russell's latest call on what we could see. So, I guess we just take it day by day, headline by headline at the moment, right? But you rightly pointed out that our market has underperformed while other markets seem to be shrugging it off.
That's right. I think there's still this faith that Trump will ultimately deliver something or other anyway. I guess that the danger is that one of these days it won't work. And of course, this situation that he's got himself into with Iran is an example of how it is a lot harder for the US to get out of this. Iran is a formidable foe. They've shown that they don't really need nuclear weapons. They just need to be able to block the Strait of Hormuz. And that gives them huge leverage over the US. So that, I guess they've got themselves into a bit of a quagmire here. Maybe it's a bit like the equivalent of Vietnam. America would have thought it would be a walkover back in the 1960s, and of course they were still going, and ultimately the Vietnamese won despite the significant better firepower that the US had. So that's the big risk in all of this. I think in the meantime the world moves on to some degree. Saudi Arabia and UAE will do more to look for alternative ways to get their oil out. I think Qatar will do the same with its gas over time, but that will come with some cost. In the meantime, we can run down reserves a little bit, but there's still a problem there that if the Strait of Hormuz just stays at 20% capacity, then eventually you will run into some sort of problem in the short term with reserves being depleted globally. But obviously, markets aren't too concerned about that at this point.
What do we watch out then for over the next week, Shane?
Well, the big one probably is the US inflation numbers, which come out on Tuesday, I think it is. They have been going the wrong way. These numbers will probably show a bit of a dip in the monthly CPI and see the headline rate come down fractionally. I think the consensus is something like a 0.1% fall, and that's because of the fall in gasoline prices. Underlying inflation, though, is probably going to stay around 2.9, 2.8. Bear in mind that the inflation number that the Fed looks at is the core PCE, private final consumption deflator. That'll come out a week and a half later, and it'll probably still be around 3.3, 3.4. So there's still an issue there, even though the inflation numbers might show a bit of relief. In Australia, we've got, of course, the consumer confidence and business confidence numbers from NAB come out on Tuesday, and you can see there that there has been a bit of a bounce in the Roy Morgan measure of consumer confidence from the lows. But if you look at that chart there, they're still very, very low. We've just gone back to the pandemic low, or the low that we saw on the back of higher interest rates in 2023. So there's probably not going to be a lot of cheer in those numbers. I think still fairly soft. Then, of course, we get some Chinese economic data out on Wednesday, and this is the quarterly data for the June quarter. It'll probably show growth edging down a little bit. I suspect down into the 4.5, 4.6% for annual growth, and retail sales figures probably remaining negative along with investment in China. But basically, the Chinese economy is still motoring along, but heavily reliant on exports. But apart from that, it's a fairly quiet week. There is Bank of Canada, I think, also meets Wednesday, and they'll probably leave interest rates on hold. But beyond that, it'll be a fairly quiet week. Mind you, I did think this week would be fairly quiet, and it has been on the data front. But of course, Donald Trump and the Iranians have hotted things up again with the issues in the Strait of Hormuz and elsewhere. So there's always something, so to speak, and I have no doubt there'll be something next week as well.
There certainly will be. Now, are you like me, Shane, and constantly refreshing your Instagram feed to see if Taylor has uploaded her wedding photos?
I have had a little look. I heard on the radio anyway. I was driving along and heard on the radio that she's just landed in LA after a brief honeymoon. But yeah, I have been keeping an eye out. It was amazing the she appeared at Madison Square Garden. That's a famous venue, as we all know. Elvis appeared there in 1972. I even went there, not to put on a concert, but to see the New York Knicks play the Arizona Suns. And Arizona Suns seemed to be a superior team back then, although recently the Knicks have done a lot better. Interestingly, the Knicks, the basketball team that is, owned the... that venue is actually owned by the same company that owns the New York Knicks.
Yeah. All right, Shane, we are having a little bit of problems with getting your connection, so I will leave it there, but we always appreciate your insights. Thank you so much. Have a great weekend. Shane Oliver, Chief Economist at AMP. Let's get back to the stock of the day, and that was Bravura Solutions, and Nadine spoke to our experts, June Bailu from TenCap, Adam Dawes from Shaw & Partners.
It was once upon a time the market darling, and when it was winning contracts and growing in the UK and the like, but it's been really struggling for quite some time. But since 2023, the latest CEO, who's been there for a few years now, I actually think he's done an incredible job in turning around this business. By focusing on the cost out and the like, and this latest upgrade. Really a sign that the cost out program is working really well. I think the challenge for this one, I'll put this one on a hold. I'll sit back and watch a little bit because the organic growth is still not that strong.
I think it's a hold as well. I think there's plenty of other better software companies, tech companies that you can invest in the ASX. But managing costs, and I think that's the major thing, and they continue to manage those costs well as they're investing in that core technology and exploring new initiatives. Now, exploring new initiatives could be anything really, let's be honest.
Let's have a quick look at the leaders and laggards and how we finished the day's trade. Also, of course, a lot of momentum in these uranium stocks. Deep Yellow, one of the best performers of the day, up almost 8%. South 32 also had a good day. The laggards today included these stocks on your screen. Nadine was just telling us that Pro Medicus has lost a bit of a bull in Jefferies now. So Pro Medicus shares down 7.5% on that broker change. Karoon also under pressure on its update, down 4%. Let's have a look in the small end of town, including Cauldron Energy had a great day, up by some 22%. The laggards in the day's session in the small end of town included the Brisbane Broncos. I wonder if that had anything to do with the Queensland State of Origin loss. Sorry to rub that in for our Queensland friends. All right, let's have a look at what we are seeing tonight. The Fed issues its monetary policy report. Shane kind of talked us through what we're expecting next week, but let's have a quick look at what we are expecting. CPI, the main one in the US on Tuesday. Bank of Canada coming through with its interest rate decision on Wednesday. And then locally, we've got quite a few quarterly updates ahead of course, the key reporting season in August, and that includes from Rio Tinto, Evolution Mining, BHP and Northern Star. A final look at where the CBO 200 has finished the day's trade. It is firmer by 0.4%. The S&P ASX 200 closed higher by 43 points, 0.5%. 8,806 for those of you who like those round numbers, back above 8,800 points, crossing back above its 200-day moving average and narrowing its weekly loss to just 0.4%. Still though, 4.3% off all-time highs. Have a very safe and happy weekend. We'll catch you from 9:45 a.m. Eastern on Monday.